Hello, guys. This is Julie. I'm glad you're back. We want to look at creating the distributions with multiple time frames and days to load for the data. So, if you think about the days that are required to run a distribution, you want really the current period to capture that. But sometimes a longer time frame period. So, when you run your bars backward in time, you will eventually run out of um, space to run the calculations. But if you had assigned that 5,110 days, it would allow the distribution to print. So you get additional time periods to print distributions for your historical bars. And when that carries forward until the current session, you can sometimes find little gems of support resistance from those levels as well. For instance, this is the 12-week one, and I've got that connected to the input series of the 5,110 days to load. So I'm running the monthly open and close on the 3,000 days, the 90-day open and close on the 3,000 day, because I want that current period. And the 12-week open and close, the 12-week open is going to be on that second, well, sorry, I've got one running on the 3,000 as well, open and close. But then I added an open, just the open for the 12 week. I didn't want to, I could put up another line, but it'll be right there with it. Um, so, and this is on the 5,000 days. There you go. So you can get an idea when I'm about to show you um, the monthly and weekly, how these levels, why it just stops in the middle of some place and you can't get past a level. Like here, you've got 3 days, and the market is still trying. Um, so the monthly, likewise, we had first two sessions here at the 53.82, 53.99. Finally got a big bull bar to break it. Ran right up to the 30-day one at 54.47.50 and stopped on a dime. So your monthly one or your 30-day one was controlling along with those quarterly 12-week ones. And then when you look at the weekly, you can see that you were on the weekly too, right? So this is this is either the 5 or 7 day. Let me see. 1 week. Okay, so I'm running 1 week open and close, 7 day open and close, and 5 day open and close. And likewise for this data series, I'm running a data series on the 60-minute bar and the daily bar. Okay, so this can give you some indication of what the market is likely to do. This inside tail, I'm just running the tail only of one, which means it's one time outside the distribution, 3 to 3 on a 60-minute range. So it can give you some good indication that you might be a little, I'm using it like a stochastic level. It can oscillate between that 60-minute distribution tail up and down, like you see here. It came back when it tagged it, and here it tagged it and sort of tried to bounce off of it and go back up, and it did. Here we just kept going down because we're going to target the ones again, and it was not able to get through. A lot of support. I mean, 4 white lines. that wasn't going anywhere. All right. So, and then the daily, same thing, 1, 2, 3 on your daily time frames. We had a breakout on the 12th, Wednesday, so that was, the exuberance off of the Fed, and it, like I said, ran right into these support levels, weekly, monthly, and quarterly, 12 week. Now we've got the quarterly, which my quarterly is not next week's. You've got the options expiration quarterly, you've got the quarterly roll, and you've got VIXpiration. We'll be looking at the VIX in just a second. So that comes into play. Um, so these are the end of the month. And so you can see that there is a lot going on through the end of the month and not very much, for about 80 points to get up there. Um, I do have an intraday chart that I showed a little bit. So I've put the daily ones in yellow, open and close, open solid, close dash. So here's your inside the daily one range. And these are the 60-minute levels. And here is that first tail and second tail. First tail usually catches it. And so for the 60-minute levels, I've got a template for you for this, but I'm just showing 25, 50, 75, and 1 are standard levels, but I'm only printing the fib 2, 50%, and the fib 4 for the, I'm amplifying those lines. And so the first one is 1 time, mean to 3 outside the 3. Okay. So, and you can see that the market, is very much in line with the 60-minute range inside the daily, for a daily time frame. We're also running another higher time frame on top of it, intraday time frame, and I'll give you the template and show you that is when you subscribe. So this makes a very good overall system to keep an eye on whether you think the market is in line with the current trend or did it break the range. Once you see that these ranges break, you know that the market is being, marked up. And here we went to the daily one, or the actual this higher time frame. Oops, I'm showing it. I didn't mean to do that. Higher time frame one, our hedge went right to it and pulled back. Isn't that amazing? And then proceeded to move on up. So these levels are dynamite. Had a inspiration from a course that I was able to view on Gamma, and the intraday time frames that the market makers dealers look at tie into that 1 hour, 5 hour period. So there you go. I've already spilled the beans. So it's fantastic. Definitely check that out. And like I said, when you see the 1 hour break above, so you see how the 1 hour broke above here, the 5 hour range, it broke it, then you can get a change in direction and the market went up. Well, it always goes up, but there it went. But that is largely due to that first breakout, and now it followed through. Sort of a leading indicator. They're looking at it for the gamma. We can look at it for the actual support resistance levels. All right. for the volatility that the market is trading in. So before we look at the VIX, I want to put it on the SPX and do a top down also. So when you change your chart to a new instrument, the changes will probably, be locked in on the chart that you've changed. But if you have other charts set up, like these all flip to the new instrument, we have to go in and refresh F5, refresh the screen. But this one is locked in very well. You can see, come in, go to the quarterly ones. Now we're sitting on this little ledge above the quarterly one, and so yeah, 54, 7303 and 5478.95. The JPM, JHEQX sitting right up top of it, 5515. So what I mentioned to other people this morning was, that the dealer, the JP Morgan, the largest hedge fund in the world, 49, 50 billion, 70 billion, whatever it is, in that JAEQX fund, um, they're long only in the market, and the dealer is parking their risk for that call wall that expires the end of the month right above my quarterly one that expires at the end of the month. So that confirms this level, this one might hold, and the market may not be able to get up there and touch it, is what I'm trying to say, right? So right here is your 3-month one on the open. So this is how we know that these levels are pretty darn good, right? Because the dealer is parking their risk just outside the level, just like you would do if you were selling a call or selling a put on the other side, right? Okay, so we might see a little bit of a reversal, and we need to time that on volatility. So let's take a look at the VIX. Okay, guys, this is the VIX. It's the monthly, and you can see that the market likes the monthly levels. They go to they break the one, it went right to the two, popped back to the one, popped up to the three, came back in, and here came down to the monthly two and stayed inside the monthly one. So we're pretty, you know, still low volatility overall. We can fib these and get an idea of where we are intraday, and I like to do that on the 23, 30, 37 day distribution to give you an indication of where we are. And here's where that is. So here is your 23, 30, 37 day, and you can see that price is trading right in the middle of these ranges. And in fact, the means had held the price of the VIX for quite a bit, the 23 and 30 day. So we are flush in the middle where they want it to be going into that expiration. Nothing better than being in the middle of the ranges so that when they open a new distribution, it's just pretty seamless, right? And there's plenty of room to run to either side before their risk is in jeopardy. So there's little chance for you to mistake that they've parked it in the middle of the range for a reason. So we might see continuation of that low vol um, thesis going into next week. And what that looks like on an intraday basis, It's still very stochastic intraday inside that range. The daily sometimes controls, but you can pop over these ranges easily when they do break. Um, and then they come right back in. Usually the ball crushers will come in and fix it back down. And the intraday level is amazing on the VIX as well. So this little 60-minute, 1 hour, 5 hour template works great. So definitely check that out. Um, and I've got the daily as well as 1 hour, 5 hour on here. So the market tried going long ball and they were crushed back inside. So we have this nice wedge going. You like wedges, don't you? I do. And so when you break that wedge, um, that can be the start of a move. So if you don't know your patterns, the wedge is an excellent pattern to take a look at. I get right out here on these highs. And it looks like it, tried breaking to the downside. It did break to the downside. And then it went right back up. Little fake out breakout here. 5 minute wedge failure. So what they say is if it fails, see if it stays, within halfway of the wedge range and then come back down. We don't know the way the vol is going to oscillate going into expiration. My guess is the market wants these quarterly ones, so we're going to be going short. And so I'll be looking for my daily ones to control, as well as these hedges on the 60-minute and 5 hour, 1 hour, 5 hour hedges to trap any drop. So that about wraps it up. Really like the new templates. I give you templates. I don't sell you things. I noted that there was another competitor that sells indicators, but then they'll sell you the training to use the indicators, which, I'm kind of scratching my head at that. But not here. We'll give you all the templates you need. I'll work with you in a Skype training room, help you get acclimated, up and running. Many people come to the first meeting or two and then they're on their merry way, drawing their own distributions. But you're always welcome to pop in anytime. I'm starting to do some more Twitter stuff. I'm going to try to get a live feed up so that my subscribers can have a live feed to check out. Check on the website for the Twitter and the website for these markets and see if you don't have the platform, then if you subscribe to the levels, you can see it, see them on the live feeds that we try to get set up for you. All right, guys, we appreciate it. Thank you so much. I'll have a great rest of your weekend.